Welcome to St. John's to an adult formation. I guess we would call this more a presentation. We're lucky to have two members of our finance committee tonight. They both have professions in the investment and finance world. They're both longtime parishioners and have a deep love for our church and want to share that information with you. So we're going to record this tonight so we can make it available to others on the cloud. And without further ado, let me welcome Eric Babcock and Andy Stewart, and I'll let you make your own introductions and just continue.
Yeah, hi, I'm Andy Stewart, again, parishioner for a number of years now, work in investment management and wealth management. I'll let Eric introduce himself, but because of the world of compliance in our lives, we should probably say out loud, this is not investment advice, nor tax advice, that there are only particular forums where it makes sense to actually call something advice, and this is technically not one of them. We're just trying to lay out some facts for you and kind of point you guys in directions to potentially give to St. John's in ways that are more efficient for you and your financial lives and your tax lives. So just drawing your attention to some things that might be available to you. You should always get professional advice from a licensed tax person like a CPA, or talk to your own wealth manager for the investment manager, wealth management side of things.
And I am Eric Babcock, longtime St. John's member, been in the finance, investment, wealth management business for 30 plus years. Here at St. John's, I've been on the stewardship committee, the vestry, the finance committee, and where that rolls over into my work, and I'm sure Andy will agree with this, part of our job as wealth managers, investment managers, is helping people be good stewards with the resources they've been blessed with. That is part of our job. So that's really part of this conversation tonight. What we were hoping to do is just talk a little bit. In our finance committees, we spend time talking about this year's stewardship campaign. We talk about ways people can give. And that's really what we wanted to start with today. If you're watching this, there's a good chance you're a pledging member already. We want to help you be in a position to give tax efficiently, give the full benefit of what you're trying to give. If we can cut Uncle Sam out of the deal, we'd like to help you do that. And then also, if that allows you to be able to give more, that helps us. It helps you, helps us as a congregation. It helps you. So that's really where we want to get started. I think we agreed I would start, and I'm going to talk about a form of giving called qualified charitable distributions, or QCD for short. A QCD, or qualified charitable distribution, is an IRA distribution. Now, the way it works is when you are over 70.5 or 72 and you're taking your required minimum distributions. So if you have an IRA that's subject to required minimum distributions because of your age, or sometimes in the case of a inherited IRA, and you want to give, you can give all or a portion or even more than your required distribution to a charity without having it hit your tax return as income. So the way this would work is you would direct your financial institution to make the check payable to the charity and mail it straight to the charity. When you go to do your taxes, you can leave that portion that was sent to the charity off your tax return. Now, I'm not a tax preparer. I'm not going to tell you how to do that. Your tax preparer can help you with that. But at the end of the day, it reduces your AGI, your adjusted gross income, reduces the income that you have that's subject to taxation. There's another benefit that just went right out of my head. For most people, especially if you're old enough to be making required distributions, you've probably paid off your mortgage, maybe not, but a lot of people have. If you're reasonably healthy, you don't have a lot of medical deductions. My point in all that is just most clients that I deal with, because of the significant increase in the standard deductions, no longer itemize. They are just using standard deduction. So if you're taking your distribution from your IRA and then writing a check to the church, you've increased your taxable income, but you're not getting the deduction you used to get for making charitable contributions. So this is a way that allows you to still get tax benefit for giving the money to a charity, in this case, St. John's, without having to worry about a tax deduction. You're getting the tax benefit anyway. It does require some paperwork. There's some timing issues. This time of year, I know when my clients call me and they're like wanting to do this in the last week of January, I have to remind them that
December.
yeah, last week of December, I have to remind them that, you know, half my staff and half the people that work at the brokerage firm are all on vacation. They're all taking time with their families too. So it gets tight, and I'm not saying it can't be done this late in the year, but as you're thinking about your 2023 pledges, this would be a good strategy for you to consider. Maybe when you're doing your taxes this year, talk to your CPA, talk to your tax preparer and say, hey, for next year required distribution, can I do a qualified charitable distribution, or QCD for short? Andy, do you want to add anything to that?
No, yeah, I think that's pretty straightforward. We started with that because for most people who are over the age of 72 typically, or again, if you have an inherited IRA from somebody who's passed away, who could be very much younger than that. For most people who are charitably inclined, I think the QCDs have the largest tax benefit attached to them. There are a few people in really low income brackets where that might always be true, but it is often, I agree with what Eric said, for most of the clients that we help with who are charitably inclined, and a lot of our work, especially in the fourth quarter, is spent helping people give away their money. QCDs are a common thing that come up. Again, check with your tax professional, check with your wealth management professional. If they're worth their salt, they will know exactly what you're talking about when you bring it up, and they'll be able to tell you pretty quickly whether or not it applies to you.
And it just a simplified layperson's terms, just, I want to make sure I understand this. Your institution would make the check payable directly to St. John's,
Yep, that's
and
important.
then you get, the person gets the tax benefit, that they're never going to pass it through their checking or savings or any other account. It comes directly
If the
to-
check touches you, then the whole thing breaks and falls apart.
Okay,
The whole idea is that a normal distribution from an IRA, it's like you earned that income in a paycheck.
okay,
It's taxed normally. And if that distribution comes to you, it gets taxed normally and it can't be undone.
I see.
It has to be the QCD directly from the IRA to the charity 501c3 organization like St. John's. And then you have satisfied the required minimum distribution the IRS cares about, and also you've avoided federal, state, local income taxes that normally get attached to distributions from an IRA.
Just a common question I get would be, how will the charity know that it's from me? I'm sure every brokerage firm has a different form. The firm we use have a spot right on it called other information, and you just fill in, you know, this is pledge to 2023 pledge from, and it'll be right in the memo line. There's also a line a little above that where it's, you know, in care of. So you have the check made payable to St. John's, but then it'll have an in care of line, and you can ask the office whose name they would like there, so that the treasurer gets the check, or the person who makes the deposits gets the check and can record it in the system and get it into the church's bank account. So it's just on the paperwork. Paperwork's not hard, and certainly your advisor can help you fill it out.
Yeah. So that is a way for cash to go from your pocketbook over to St. John's. Again, from St. John's perspective, it's just like you writing a check. Cash it, go straight to the bank and move on with life. Another big way that people can give to charities, including St. John's, in a way that has tax efficiencies to it, exists in the world of a normal taxable account. So you have a brokerage account or a trust account that your financial advisor yourself is trading individual stocks and bonds or ETFs, mutual funds, anything that you can kind of see on a Schwab or Fidelity or TD Ameritrade statement. But it's in a normal taxable account, which some things that might help you understand, which are IRAs and which are taxables. If you see reports for capital gains, then it's a taxable account. If you get a 1099 every year from your broker, it's a taxable account. One way that you can give assets to the church that is beneficial for you is to, rather than selling securities inside an account like that, and then you have cash, and then transfer that cash to your checking account and writing a check to St. John's. If you do that, you have to pay capital gains taxes on the security that you sold. Alternatively, you can give the security directly to the church. And again, it's more paperwork at the custodian, at the broker. Your financial advisor can help you with this. You have to choose what securities you're going to send
And how much?
and how much. The exact amount that you are officially transferring does move around a little bit because you gave 10 shares of Apple stock, let's say. You might make that decision today. The paperwork isn't going to get completed for a handful of days from now. It gets transferred on some day that your custodian broker kind of marks, and that is what you're kind of record as the tax deductible donation, you might say. So you might say, I wanted to give $1,000, but it turns out you gave $983.76 because the price of Apple stock is moving around. And so perhaps if you really care about getting those numbers on, you tack on an extra check at the end. But for the portion that gets transferred of, again, that Apple stock, there's no capital gains taxes because you didn't sell it. You just transferred it out of your account. It's a donation, no longer belongs to you, it belongs to the church. The capital gain actually follows the Apple stock along, but because St. John's is a tax-free entity, it can sell a security like Apple stock or anything else without having to pay capital gains. The same way that the Harvard Endowment can buy and sell stocks and all sorts of stuff, and they don't have to pay any capital gains. University of Michigan, St. John's is the same thing, even though the church is not managing a stock portfolio. And they will follow pretty strict rules where, as soon as possible, I believe that, correct me if I'm wrong here, the church sells those securities quickly.
Yeah, I think I'm gonna tell you that if you are in a position to do that, make a call to the church or email the church, and we will put you in touch with the diocese who is the entity that handles that for us. And Mark Miliotto happens to be here. So can you tell people how quickly that process works, or anything else?
Yeah, St. John's comes through the diocese because St. John's doesn't have its own brokerage account, because St. John's investments are held by the diocese. So we could open a separate brokerage account, but there's no need. We have one in the diocese. So a donor who wants to make a stock donation to the church I could give the instructions to the donor. They transfer it to our Schwab account. Usually it comes in at night, and then the very next morning, I'll instruct our broker to sell it. And then there's a 3-day settlement. We get the cash, and fees now are like, 20 cents. I mean, it's some ridiculous low number now. So the proceeds are almost every penny of the proceeds then comes to St. John's. And the diocese doesn't take a cut. We're not.
Which is helpful, that we don't have to pay that fee to the diocese, and then when we get a notification from the diocese, we know what the exact amount is of the sale, and we post it right to your account, and you would be able to check with us within a matter of a day or so.
Yep. So that is another useful way. Again, the reason to do that and not just write a check is all about your taxes. The church is fairly unconcerned about these different ways of giving money. It all gets moved to cash as quickly as possible in the use of the operations of the church. This is all about helping your tax situation. And when it comes to gifting securities, you do need to put some thought into it. And this is again where a financial advisor can help. But if you've ever done any trading inside a taxable account, you pay taxes on gains. You don't pay taxes on losses. In fact, if you sell something at a loss, that helps your taxes. So you want to make sure that you don't give to the church a security that's at a loss. That would be damaging you. The loss would disappear along with it. And that would help your taxes to have the loss yourself. You also don't want to just look for the largest thing in your portfolio. It really requires kind of looking at all the lots of all the stuff you have, find the things with high percentage gains. That's how you maximize the tax benefit. I'll kind of like circle back to something Eric mentioned, right? Because I think the thing that most people for decades thought about in terms of the tax efficiency of giving had to do with itemizing your deductions, right? That between your mortgage interest and your state and local income taxes and the donations you did and medical expenses you were subject to, you lumped all that together and you managed to have enough itemized deductions to get above the standard deduction. Because of the tax law passed in 2017, that is now not true for lots of people, where the standard deduction is quite high. There's a bunch of stuff that used to count towards the itemized deduction that doesn't anymore or has caps. So getting above that is happening to fewer and fewer of us. So if you are interested in maximizing the tax benefits of giving, one of these other two ways is your more likely bet for actually making an effective tax deductible gift one way or another. You do a QCD and it's avoiding income taxes altogether. You give appreciated stock and it has nothing to do with your income taxes, but you get to avoid capital gains taxes, which is a different tax rate. You can talk to your tax people. They'll explain all this to you if you really want to get into the weeds. But even after the recent tax changes, there are ways that you can give to St. John's that are tax efficient for you in ways that we hope at the very least save you money, or perhaps as Eric said, allow you to think about giving more. Because if we can, you used to take $100 out of your IRA and then give 20 of it in taxes and 80 came to St. John's. Well, now what if we make that 20 go away and the full 100 can go to St. John's? That's kind of where we're thinking, and we want to make sure everybody understands how this works. Hopefully help you.
One concern I'll bring up, this is a true story. I'm just going to tell it in the form of a story. It's a true story. It's a specific client of mine. She brings her sons to our meeting because her son, he happens to work for the Catholic Diocese in downtown Detroit. He's one of their accountants. And so we bring her to the meeting and I bring up this concept of a QCD to her because I know she's giving to her local parish and she won't do it. And we're talking to her about it, like, this is going to save you quite a bit of money on taxes. What's the problem, Bev? And she's like, what would I put in the plate as it goes by every Sunday? If I give my annual gift once a year, I won't have anything to put in the plate. And I had to tell her, I said, I sit on the finance committee at my church, and I can promise you, your church does not care if they get it once a week or once a month or once a year. As a matter of fact, they probably like getting it once a year in a lump sum, all up front. Then they have it in their checkbook and they can plan accordingly versus waiting for it to come in on, on Sundays, as we go through I will tell you, we have our monthly finance committee meeting and we watch that plate go up and down and we watch the pace at which the pledges come in. Getting it once a year is kind of a benefit to the church. So if you really need to put something in the plate, put a blank envelope in or put a note in there. I gave online.
Once again, I've given online. I think that speaks to sort of the act of giving that is important to people. It's important to us. And so whatever you need to do, or if we can help you come up with a strategy to help you feel the impact of putting something in the plate, we're happy to come up with a strategy. I love that story because And I loved your answer, because I think we can always find a solution. So, yeah. Some churches, they put little laminated cards in the pews that say, I gave online, or I gave annually, or whatever. So whatever makes you, connected to your gift, please do that. Can we think of other questions that people regularly have? Can I ask just a very basic question? I'd love to hear it through the mouths of people on the finance committee, because we have a lot of new members this year. Some come from the Episcopal tradition or the Catholic tradition or another mainline Protestant church. Some don't. I think sometimes people are confused by the concept of pledge, either to the capital campaign or to the annual stewardship campaign, and what it means to just make a pledge versus make a gift. And I know this is basic and maybe not a strategy, but I just love to hear you guys share that with people.
So I would think a pledge is a promise. The pledge is not the gift itself. The pledge is the promise of the gift I intend to give.
Right.
And so I think that's the difference between the pledge and the gift. When you pledge, you're promising to give, right? And then these strategies help you fulfill that promise in a way, what we've talked about, just the way fulfilling that promise and being tax efficient about it. We were talking earlier about getting the specifics of who, but we were talking earlier about how a parishioner pulled forward their 2023 gift and their 2022 gift or pledge and their capital campaign giving all into this year because it helped them get over that itemized deduction. But then next year they'll use the standard deductions. Those are fairly sophisticated tax strategies. Don't worry about that. But or talk to your CPA if that makes sense for you. But my point is just really the gift is when the church actually gets the money.
Right.
The pledge is your promise to give it.
And the pledge helps the finance committee and the vestry so much. Not only the time, not only the amount of the gift, but the timing of the gift, so that they can plan, they can budget. So
Yeah, I think that's the really important part. I mean, I think there is, making the promise, I think that's a really good way to put it, because the psychology of money is a real thing that exists in people's minds, and the community is stronger when we all together make the explicit decision individually and as families, but then we say it out loud to each other. I am pledging to this community, this organization that I care about. That does lead to people following through and actually making the gift, which of course the timing can be all over the place. But if you said out loud in front of everybody else, and this is the kind of year, this is the time of year that's right for it, right? The New Year's resolutions are coming up. All of us are going to say we're going to go to the gym, but none of us will do it. But there's all this research that shows like that the people who say to their friends out loud, I am going to go to the gym this month, and maybe I can get one of you to go with me. Like the data is resounding that those people are much more likely to actually go to the gym and achieve some sort of health goal that they set for themselves if they say it out loud to their friends and family and even drag a few of them along. I think the same is true for pledging. But the even more important side is, I think, on the budgeting side, because with the pledge, then the church understands, has at least a sense of what the budget should be like. And of course, there will be surprises, right? The people who will pledge and then bad things will happen to them, and the pledge will put them in financial hardship and they're gonna have to make a change. Or great things will happen to them and suddenly there's a windfall for the church. So you can't plan it to a T, but in the same way that those of us who work salaried jobs really appreciate knowing that, like, of course I don't get my entire annual salary on January 1st. I get it over the course of the year. Then of course, there's a chance that I'm gonna screw up my job and get fired or get laid off, or all sorts of unexpected things can happen. But I can budget on the plan of my salary.
right.
And I can factor in some what if scenarios that strengthen that budget. By all of us pledging together, the church has a salary,
Yeah.
right? And they can budget based on that salary build in some what ifs to strengthen the budget. If
Yeah,
none of us were pledging and it was just random gifts all the time, that would be really difficult for
Yeah.
the church to plan.
I kind of want to add a story to your comment about the promise and the feeling of commitment to follow through with it. When I was on vestry, it's been a while since I've been on vestry, but when I was on vestry many years ago, we got this random check in the mail. It turned out it was from a former member who had pledged probably our last capital campaign many years before, and they had then moved out of town. They never, they moved, so they didn't finish their pledge, they never gave that money, and all of a sudden, one day, a check for like $5,000 showed up 10 years later. Because this person felt like, well, no, I promised I was gonna give, and they remembered and they followed through with their pledge. It just took a while.
yeah, that's great.
I think that people who choose to become part of a community, there's a high correlation to them feeling like they belong and that they owe it
Yeah,
something. And pledging, I think, is
but they want to participate in it, you know,
Yeah.
it's like a commitment.
it's a relationship.
It's a relationship.
Absolutely.
Yeah.
And I think we each of us individually and as families and as a congregation really love that relationship and are enriched by it. And we take from it and we give to it. And the pledging process is an annual reminder of the financial part of that relationship. And money is important. It's how it's how the machinery of the church stays well oiled and keeps going, and we can afford the things that we need to help steward the relationship, both in terms of people and place and program.
Yeah, absolutely.
Well, does anybody online have a question?
I'm gonna throw one into the mix. Go ahead, Tim. Go
No,
ahead.
not a question, but a comment. I was unaware of this qualified charitable distribution. I'm sort of a not very into the financial thing. And I have been getting a disbursement for the last 3 years. It's not a minimum disbursement, but I have been getting money out of my since retiring. So this makes sense to do it this way, just get it transferred from there to the church annually.
Tim, how old are you?
I'll be 70 this year coming up.
We have to wait a little while.
Yeah. Well,
Yeah.
oh, so I can't do this yet? This has,
70 and a half, I think, is
oh,
the,
so- okay, well, then I can do it in the following year.
Yeah.
No, that makes sense, because that's a, I get retirement and a disbursement from my retirement account, or Social Security and my retirement account, but that'll make sense. Thank you.
yeah, actually, this is gonna be thinking about, if you have a 401k, you might be able to do a QCD out of a 401k. It really depends on where your 401k is located. Talk to your financial advisor about that, because there are things you can do with 401ks that would unlock the entire thing, but you want to cross some T's and dot some I's before you go down that road.
Yeah.
Just mention, retirement accounts in general, maybe remember that 401ks in terms of taxes are treated identically to IRAs.
IRAs, right? Yeah.
Yeah, whether or not the QCD is available, the places that house IRAs like Schwab and Pershing and TD Ameritrade and Fidelity, these things are all standard practice.
Right.
The 401k at a dentist's office, who knows? Depends on how that particular 401k plan is.
Well, mine started as a 401k, and then when I retired, it transferred over to a financial,
Yep,
well worth asking the question. Thank you.
thanks, Tim.
I have a question. Do you have any strategies for people who are not near that 70 and a half number? people in their thirties, forties, what, in their fifties, what advice would you give them about?
First
making
thing,
commitments?
the strategy Andy talked about in terms of gifting stock, there's no age requirement on that at all. If you have appreciated stock, doesn't matter how old you are, you can take advantage of that.
Yeah, including appreciated stock that's been gifted to you. I think there are some, wealthy 35-year-olds who have their $1 million taxable account, but let's be honest, they're few and far between. But what is a little bit more common might be a 35-year-old who has a parent who's still living and has a tidier sum of money, and the parent might be gifting on a regular basis as part of their own estate plan for the elder generation, and that's usually cash. But if you're a younger person who's charitably inclined and you have a healthy relationship with your parents and you can talk to them about money and things like that, you might be able to help your parents' tax situation. Where the parents typically, if they gave stock to the kids and then the kids sold the stock, now the kids have the capital gain and somebody still has to pay the gain. And often parents don't want to saddle their kids with unexpected tax bills. But if you know that you're a charitably inclined middle-aged person and you have gifting inclined parents, then perhaps the gifting securities is a way to provide some tax efficiency for the parents, and the kids are just passing it through the church.
The other thing, speaking of parents, unfortunately, there is that day coming for all of us. If you inherit an IRA that has a required minimum distribution associated with it, and it will have required minimum distribution associated with it if you inherited an IRA from somebody who was over 70 and a half or 72 and taking their required distributions already. So if you've inherited an IRA and now you have to take this money out, particularly if often with clients, they didn't need that money necessarily. It was their parents' money. But now they're required to take this money out while they're still working. So they're in a relatively high tax bracket. That is an opportunity for you to use the QCD or qualified charitable distribution, because that account's subject to RMDs. You can use that distribution as a charitable distribution or gift right to a charity through the same process you would with your own IRA. So
That's an excellent suggestion. That's great. I have another thought. I wonder what you all think about it. I want to move to talk just for a minute about planned giving, bequests, that which people usually, we have a legacy society here and people can say, upon my death, I plan to give, and some people have no idea how much that'll be. And some people want to say it'll be roughly around this. Those aren't legal contracts, things change, but it is helpful for a church to know if you are planning to do that at some point. But I talked to a really interesting guy who's like he works in that field in terms of what are they called, like
Trust attorneys.
no, he works at like a university, like at Wayne State or something. Foundations, or the recipients of that. And he said to me, it's not, because I think sometimes people avoid becoming part of something like the Legacy Society because, we don't have tremendous wealth. We don't think of ourselves as someone who can make a significant gift. But he said, it's not the 10 million, $20 million gifts that make the institution run. It's the school teachers and the people who are giving $5,000 requests, but there are a lot of them. And so I wonder if there's anything that in your own professions that you can see that would encourage people to not shy away from making a planned gift or a request because they don't think they have enough wealth.
Yeah, well, this is where we're going to suggest you need to get more professional help from a trust attorney. And the trick about planning your trust and your will is that it absolutely changes over time, right? So, I'll use my family as an example, right? We have a 12-year-old daughter. You look at Nicole's and my will and trust right now, and it is very much built with our daughter in mind. Right? If Nicole and I both get hit by a bus tomorrow, we need to make sure that this whole thing is built out so that Eliza's good. And she's covered. And maybe she will have more money than she'll ever know what to do with, but that's better than being on the opposite side of the coin, right? Fast forward 30 years from now, and Nicole and I are in our 70s, and if all goes well, Eliza is a successful 40-year-old in her own right, and our money doesn't mean a whole lot to her. We should update that entire plan, right? And the whole thing changes. So I think having that conversation with people too early in life, it can come off as tone deaf,
Right.
right? Because they're like, well, I really love the church, but right now I gotta, put on your own mask before assisting others,
Sure.
and put on your daughter's mask before you put one on the church.
Yeah.
Right? So you have to kind of think about that the right way. But then later on in life, I think that your trust work should get redone.
Right.
I don't think that there's any like firm rule of thumb, but I feel like often when we talk to clients who have trust documents that are more than a decade old.
And even there, you can name a charity, in this case, St. John's, as a beneficiary
Exactly.
of an IRA.
Or an insurance policy.
Or an insurance policy. What I like about the IRA piece of it is if many of my clients have both a taxable account and an IRA. Well, the taxable account, effectively, when the client passes away, any gains they had in there go away because the kids get the stepped up basis. So they basically get that account tax-free. Assuming you're under the estate tax limits, but the estate tax limits are like $25 million or more right now. So not really an issue for most people. So the kids are going to get the trust account tax-free. So instead of naming the church in the trust document, you name the church as one of the beneficiaries of the IRA. And then the money that goes to the church out of the IRA is a tax-free gift. And your kids or your heirs, whoever they are, don't pay tax on that portion.
That's
of-
really smart, yeah. That's
Yep.
great. And I was mostly just making the point that I think sometimes people avoid it because they don't feel like they have enough wealth. And it's not the amount. If the small amounts are,
I want to tell the story. It just struck me. It was just one of those days. I was ushering a couple weeks ago, and there was a gentleman who came to church. He sat in the back, and I asked him if he wanted a seat, help finding a seat. He clearly was. I think he's been here before. You probably know who I'm talking about, but he's clearly not somebody with a lot of means. And I'm ushering, so I take the plate down. He found me after I got to the back and reached in his pocket and grabbed out a quarter, 2 nickels, a dime, and an old lottery card. Because he wanted to put something in the plate. The amount of the gift does not matter to the
Yeah.
church.
yeah,
Like, it just reminded me of the parable with the widow,
right,
right? Like,
right,
it was just that story is what it was.
yeah,
Um,
that's beautiful. Thank you.
People, I think that an organization like this is sustained by a progressive system of giving, right? If all of our parishioners were in that state, then the organization wouldn't be around very long. We all give and take from the community in different ways at different times.
Right,
I'll give props to Nicole. I think she told that whole story about our family's journey much better than I could if I was going to repeat it now. We all give in different ways at different times, and it's all important,
yeah,
right?
every bit of it.
Every bit. And you threw out a number of $5,000, right? If somebody was a school teacher their entire life and all their retirement income is pension and social security. So the moment they die, they have very few assets, maybe a little life insurance policy here or there, but even a $5,000 contribution, like that's a notable single-digit percentage
Absolutely,
of
yeah,
this organization's budget.
yeah,
That's not a small amount.
right,
That's real money that can solve real problems that this church as this year. Is it gonna start an endowment that like, pays for a new roof every single 10 years? No, but you don't need that,
Yeah,
right?
Well,
That'll come here and there.
The reality is, the finance committee of the vestry several years ago set up several specific funds that if you didn't want to just leave it to the general operations, if you wanted, you remember St. John's because of the outreach for St. John's. We have a fund for that you can name in your bequest. We have a building and grounds fund because you do want to contribute to the next roof, whenever that is. We have a fund for that, so there are ways to give to those kind of things, because even like you were saying, the foundation, yeah, they're not gonna turn away the big dollar donation, but they don't come every day. It's getting a whole bunch of little ones that really build up over time.
right.
The other, this last operation note on giving is that since you don't know what's gonna happen, you may make these decisions in your 50s or 60s or 70s, and then you keep living. You don't know what the size of your estate is going to be. These things don't have to be set in dollar terms, they can also be set in percentage terms.
Right.
So, you can set the beneficiaries of your IRA, your insurance policies, you can write into your will. In your will, you can even be kind of have multi-steps, 10% not to exceed this dollar amount or something like that. IRAs don't have much flexibility, but if you wanted to not just do your entire IRA to the church, say split it up. I have these 3 kids and I want 25% to go to each of them, and the last 25% I'm gonna split between these 3 charities. Do it all on percentage basis.
And one step I have taken with clients on many occasions is we look at it and we ask the client, well, what is the number? What are you targeting towards the charity or your church? And to keep the math simple, we'll say the client has $1 million in their retirement accounts. Like, well, I really want it to be $50,000. Oh, great. Why don't we name the charity to get 5% then this year? But the thing is, you can change those beneficiary designations as often as you want. Now, will my administrative helper get upset with me if I have a client doing it every week? Yes, but if you're doing an annual review with your financial advisor anyway, it's not hard to just go back through and just, one of the agenda items is how much of, if I said 5% of my IRA, how much would that be if I die in the next year? You can change it. It's a fairly simple form in one signature to change the beneficiaries on an IRA, and to just know that you're going to regularly look at that so that you're hitting a target that you're after. If it's a dollar amount you're after, but percentages are easier. And that's easier and faster, frankly, than having to call up your estate planning attorney every couple of years and making a change where they're going to then charge you a couple hours of attorney fees, that type of thing to do the work. So something to keep in mind, that you can change those beneficiaries if you've got a dollar amount in your mind, but you're trying to do it via percentage. Change it every once in a while.
Awesome. Any last questions? Any last words? This has been super informative and helpful, and I think we'll probably ask you guys to come back again and do this again.
Every time the tax law changes.
Every time the tax law changes. Thank you for joining us, and all gifts are good.